Crude prices making a comeback Tuesday despite declines in China's benchmark stock index. All right, West Texas Intermediate up 3.4% to $39.54 a barrel. Still, of course, below that critical $40 handle. All right, let's get straight to the NYMEX. That's where Jeffrey Grossman joins us. He's the president of BRG Brokerage. All right, Jeffrey, it's good to have you here. What do you make of the levels we're seeing?
This is basically a correction here. I think they overdid it yesterday. I'm still thinking that the price should probably, let's say, moderate somewhere in the low 40s, maybe even to the mid 40s. I think it's a bit of an overkill here. I think there's a bit of a panic here. Everyone seems to be jumping on the bandwagon to push this market down. But I have a feeling that everyone's going to be in for a big surprise that we've reached a bit of a bottom near term.
Yeah, although traders seem to be encouraged by China's rate cut, and perhaps one can expect the Chinese government to intervene again down the road, which would be good for oil.
Well, the Chinese government and economy seem to be the wild card about a lot of financial issues here. Again, I think they were the tipping point that took us down even here, where the market was under pressure. Let's not be fooled. There's plenty of inventory. The consumption hasn't been anything more than what was expected. So the market has had tremendous pressure and was working lower. But this really put the kiboshes, they would say, on this market and really took us down to these new levels. I have a feeling that, again, is going to moderate, and I think it's going to be a bit of overkill. We should retrace somewhat in the next couple of weeks.
All right, now are you in the camp that says, look, amid the global growth worries, the demand is there, it's just the high supply that's been pushing prices lower?
Oh, no question about it. No, there's ample inventory. There was ample inventory when we were trading in the 90s. I kept saying that. I couldn't understand why we were as high as we were. Now we're at a point where we've probably overshot a fair target here. But again, that's how commodity markets trade. They always overdo it in either direction, upside and downside. So right now we're at a point where I think the market has overdone it to the downside. We'll see. We do need a little bit helping the market. But again, at these levels, almost anything, even in neutral news, should be construed as somewhat friendly and bullish for the market.
All right, now you just mentioned you think oil is at a bottom. So where do you see it going in the next week or so?
Well, again, in the next week is a little too near a term here. I would think maybe we're talking, I would think the low 40s. Maybe I would think $45 is a fair figure to see in the next month or so, assuming nothing untoward happens to the downside, catastrophic or so. I just think the market has to reverse and retrace itself a bit here.
All right, let's move on to some of the energy stocks. We're seeing Exxon Mobil, Chevron, ConocoPhillips all up today, but of course shares are still bruised from the global sell-off we saw Monday and Friday, right?
Well, again, keep in mind, unfortunately, everyone seems to fall into that trap that just because of the price of oil, that these oil stocks should go in lockstep. These are very integrated, diversified companies, and to think that it's just in tandem with it is a little bit too, let's say, novice an idea to look at. Granted, to say they're under pressure, but that's from an overall economic standpoint. The price of oil itself doesn't necessarily have to be the only factor that's going to drive these markets.
All right, Jeffrey Grossman from BRG Brokerage at the NYMEX with the latest on oil. Jeffrey, thank you.
Sure.
I'm Scott Gamm, and you're watching The Street.